Hello, everyone. Today's Friday, January 9th, and this is your 314 SMI investor update for the month. Fernando, how are you doing?
Doing well. Let's review December performance and talk about how we're positioned heading into the new year here.
Yeah, so as always, we are going to begin the monthly review with the real asset allocation ETF, RAA ticker symbol. For the month of December, sort of an uneventful month across asset markets when you look at total returns. The RAA eked out a 24 basis point gain. In comparison, 60/40, which is the benchmark, appropriate benchmark for this portfolio, was flat. Now, these charts that we look at, we always decompose our performance. The first side, the left-hand side, is performance by each individual asset. And then the right-hand side is performance of each broad asset classes. That's alternatives, equities, and fixed income. And you can see from both of these that we benefited this month in the month of December from our alternative weighting. And primarily, we see, if you can look at the left-hand side, you can see that metals miners, that is, and precious metals and industrial metals, along with EM, equities, and gold were the primary alternatives drivers. The rest of the portfolio, whether it was NASDAQ, S&P, or fixed income, really didn't do much for us. So that's the performance breakdown for December. Let's look at how the ETF is positioned for January. This table is a table that we provide for 314 clients, for research clients who like to monitor the RAA model, which is the underlying model for the ETF. Um, and you can see the benchmark weights on the left-hand column, and then the what weights the model has going into the month of January, labeled December 31st. So that's the rebalance at the end of December. The big message here is that going into the new year, the model has gone from pretty underweight equities to, I'd say, decently aggressively overweight equities. And the most of that is in NASDAQ. You can see the NASDAQ went from, again, slight underweight to a 29% weighting within the fund. S&P 500 still a modest underweight. Small caps, an interesting overweight this month within the fund. Where is that weight coming from? Well, you've seen the model reduce its fixed income exposure here. Investment grade corporate bonds have saw their weighting come down. Long-term treasuries saw their weighting come down as well. So that's really what we're seeing. The alternatives bucket, we're still running basically benchmark weight, but within that, it's primarily gold, miners, and managed futures. And so far in the month of January, it's been a good call from the fund to rotate into those miners and equities. Now let's talk about the FCT, ticker symbol FCTE, full cycle trend fund. Let's just to set the table by reminding everyone, full cycle trend ETF is a quality-based ETF, 20 stocks equally weighted and rebalanced monthly. The uh, the So this is a quality fund, and quality's been in a bear market. It was a rough year performance-wise for the fund. We are hopeful, and we see signs that quality as a factor is starting to gain its footing, especially as we rotate into the new year. And so that's encouraging. For the month of December, FCTE was down very slightly, 17 basis points versus S&P 500, which was essentially flat for the month. The performance drivers last month, you can see, really it was about uh, Lam Research and NVIDIA helping performance. And you can see that on the stock side. And you can also see that on the sector side of this slide here, where we're looking at the breakdown, the performance drivers by sector. And the big green block is the tech sector. And the red block is consumer discretionary. You can see that's really AutoZone down there on the left-hand side. And so it was a mixed bag. Tech was helping the portfolio out, and there was a pretty aggressive rotation the month of December into tech. So, and it's maintained that weighting going into January. In addition, you've seen the portfolio rotate into healthcare. And so far in the month of January, it's been a pretty solid performance for FCTE. Um, so that's the way we're positioned, and I think anyone who's running a quality-based strategy is happy to see 2025 in the rearview mirror here. Fernando, do you have anything to add to this analysis?
No, I think that's a good place to end it here.
Yeah, I think that's everything for now. As always, we'll be back next month with the update for first update, reviewing the January performance for 2026. I hope everyone's had a good New Year's Eve, a restful holiday season, and is ready to get back to the markets. So, thank you.